right, welcome back to the Nadlin Forum Podcast Daily. I'm Ruby Sturt, chatting here as always with Lior. And mate, today's stat kind of floored me. The average US homeowner is now over 50 years old. 50.75. That's wild, right? That's way above the country's median age.
Yes, it's pretty crazy, right? In some ways, I guess it makes sense. But still, over 50 is a big jump. When you look at the numbers, homeowners are averaging almost 52, but the whole US population median age is just a little past 39. Something is definitely going on here.
Almost makes you wonder if buying a house is going to become a 50th birthday present, you know? Like, congrats, you made it! But it's not just about getting older. Where you live seriously affects your odds. You look at cities like LA, San Diego, Miami. Those places are brutal. Median monthly housing costs over $2,500. Young people, honestly, most people, just can't break into those markets anymore.
Absolutely. And it's not just the West Coast, it's all those big, expensive metros on the coasts. Florida's way up there too. And you see this domino effect, rising prices, higher down payments, and next thing you know, it just takes longer for young people to even think about buying.
Yeah, my cousin Jess, she's still renting in her late 30s in Sydney. I know it's not the US, but the vibe's basically the same. High costs just put home ownership so far out of reach that even after saving and saving, she's still renting. And I hear those stories all the time, from here to Brooklyn to LA.
It's super relatable. Renting used to be a phase, but for many, it's like forever until something changes, especially with all these economic pressures. And honestly, that older homeowner stat is going to keep climbing if this keeps up.
But let's pivot a bit, because it's not doom everywhere. There are some places where young buyers actually have a fighting chance. Metros like Salt Lake City, Austin, Oklahoma City, those spots are younger, statistically. More people in their 20s and 30s own their homes there.
Exactly. These are the markets attracting young professionals with more realistic property prices and strong job markets. Take Austin, for example. It's been a magnet for tech startups. Lots of those founders, software folks, they're moving out there because New York or San Fran is just, unaffordable. In Austin, you get strong job growth, lower living costs, and a property market that hasn't gone completely bananas. It's like you actually have a shot.
And it's not just techies, right? Look at Oklahoma City or even a growing Salt Lake. More entry-level properties, lower cost of living, mortgages that don't eat up half your paycheck. All of that matters, especially for first-timers. So I guess the lesson is, if you're young and you want to buy, you have to go where the opportunity is, even if that means moving a state or two.
Right. But not everyone can or wants to pick up and move. Still, these cities prove that affordability and opportunity go hand in hand. Where you see job growth, especially with industries that attract younger people, there's almost always a younger homebuyer crowd too. And the friendlier mortgage environment doesn't hurt.
Plus, we talked in a past episode about how inventory and zoning changes can actually unlock new opportunities for buyers. It's all connected. Cheaper housing markets tend to have more new supply and fewer crazy regulatory hurdles. That really tips the scales in favor of younger folks. Okay, let's get real for a sec. The biggest hurdles for young buyers, a lot of it comes down to student debt, tough credit requirements, and wages that haven't kept up with home prices. You can have the dream, but there's a big wall in the way.
Totally. Student loans alone can drag your credit and mess up your debt-to-income ratio. And then you throw in high down payments and today's mortgage rates. It's no wonder so many people are priced out. You need a good job, low debt, and sometimes a miracle. Well, not really. But you know what I mean.
Absolutely. So that's where policy ideas come into play. We need more housing supply, flexible financing, even some targeted help like down payment support for young families. Without big changes, young buyers are just going to be stuck on the sidelines.
Yeah, and some places are experimenting already. like these shared equity programs or employers who help pay toward a home. It's not everywhere, but it's a start. Creative solutions for a tough problem, you could say.
And as we saw last episode with affordable listings, just having more inventory isn't the whole answer. You need the right financing and policies to help people actually access those homes. It's like fixing the whole ecosystem, not just one piece.
That's the point. No silver bullet, but if we all keep pushing, whether that's policy, lenders, even employers, maybe the next stat won't be homeowners over 50, but a whole new wave of younger buyers. At least fingers crossed.
And we'll keep tracking it for you. That's a wrap for today's episode. Leah, always a pleasure.
Thank you, Ruby. Always a great chat. And thanks to all our listeners for tuning in. See you next time.
Catch you all soon. Bye.